What's up, everybody? This is Jimmy with Trading Decoded. It is April 22nd, 2024, and it's 4:07 in the afternoon. What an amazing day today was, both to the upside, the downside, and everything in between. It was a super clean chart today. You just had to wait for the right setups, which there were plenty of. Lots of money to be made today for those who didn't have a bias, and that is a thing too. After coming off of a week like last week where the market seemingly wanted to just sell off every day, it's natural to believe that there's still more room to the downside. And I do believe in the long run, there is plenty of room left in the downside, but we've got to play the chart for what it is and what it gives us every day. It's very hard to not have a bias, but it's almost impossible to trade against a bias. So if you do have a bias, one way or the other, please consider skipping the trading day or waiting for the move or the market to be moving in the direction that does follow your bias to wait to trade at that point. For example, if you have a put bias, make sure we are trending down before you decide to trade. Because if you try and trade with a put bias while the chart's trending up, you are going to be buying puts at every new high of day, and you are going to get toasted on a day like today. Okay? You would have been out of money by the time you started to win by timing the top. Okay? On a day like today. With that said, we're going to go ahead and open up the charts. And the title of this video is Take Your Cues from the Cues. Before we even get started on the trades we talked about and everything we were looking at, I want you guys to take a good look at how well the cues lines held today. Okay, so we had our first target high here. We got out of the pre-market range pretty quickly. Pre-market mid, cues high, but these lines were fantastic levels of support and resistance today, guys. And all it is support and resistance. And if we can learn to at least respect those for profit taking or pullbacks for reasonings to get into the trades, almost every trade setup you're going to see on the SPY chart today was based on the chart you're looking at right now. Now, I know inevitably somebody's going to ask, because they always do, Jimmy, if you have so much faith in the cues, why don't you just trade the cues? Well, the reason I don't just trade the cues is because I have an entire community of people trading futures, SPY, and SPX based off of the charts that I share and the things that I'm talking about. I can't switch over to the cues, but what I can tell you is that the cues are responsible for what mostly happens in SPY. Okay, if cues are trending up, there's a good possibility SPY is doing the same thing. What I won't do is ever trade in a situation where cues are moving up or down and SPY is doing the opposite. Until the cues are no longer the king, I will continue to trade with them 100% of the way. Okay? Even if ADD is moving up, I am not interested in playing against the cues. Okay? That is wildly important to understand. So when you see the exit circles on the SPY chart today, it's because the cues are at levels of resistance or support, and it's time to consider taking profits or at the very least moving your stops down so that you cannot lose on these trades should you decide to hold them for more. Okay? So just take a look at these lines. Every single one of these lines was here at 8:30 in the morning. An hour before the market opened. Okay. Now, what were we looking for on SPY? So on SPY, our call line scenario was a break above 498.53. And the reason for that was because we were stuck, above 497.97 and below 498.32. I didn't want to take calls breaching 498.32 because it wasn't going to leave us enough room before our next line of resistance. So the call line is up there. And then if we got through that line, we'd be aiming for 499.08. Likewise, to the downside, there was two scenario situations. Number one, 497.22. I was just trying to be conservative for the folks who were mostly conservative traders. But I said very loud and clear, I would be interested in puts if SPY can get back below 497.97. That same level of support here. Now, I opted to make the put line for my conservative traders in a conservative place. The folks in our community and we have aggressive traders too, also took this very same trade right here that I did for the same exact reason that I did. Now, my thought process was if we can get through this line of support, that we'd be more likely to head down to our put line scenario. Why? Because there is no support that was created on the way up once we got up here. So my thought is if we can get through that, we'd move down to the next support, which was right here. More importantly, if you're going to take this trade, we need Qs to stay below 417.73. As long as Qs stay below 417.73, I believe that the Qs were going to come down to 416.60, this pre-market low line. Okay? Very clear instructions about what I wanted to do. Very clear understanding about what I expected to happen. And then what we have to do is adjust if certain things don't take place. So, right off the rip, we were interested in buying puts because we had broken that support. It turned it into resistance. We're looking for the move to go from here to here. That happened in a minute and a half. So for many people, that was a nice trade that they got out of very quickly with a 25+% win in 2 minutes, and they were done for the day. Dream setup. Now, I understand that it really all depends on what your position size is, which should have nothing to do with it. But too many of us are trading based on a certain amount of money, not a percentage return on your money. Okay, so you have daily goals. I need to make $500 a day. I need to make $1,000 a day. I need to make $100 a day. That's fine and dandy when this is your day job. But when you are looking to be consistently green, you should be looking for proper trade setups that make sense to you and that you feel comfortable taking, and then follow the trade plan and get out with whatever you're given. Great. Now, if you decide to hold on to your trades through these profit targets, all I suggest you do is move your stops to break even so that if you try to hold for longer and you get a pullback or it starts to go the other way or whatever the case is, you get out with very little loss. Okay? Very little loss, or hopefully none if you put it at break even. All right? So there's no harm in trying to hold for more as long as you protect yourself on the backside from giving up not only everything that you were once up, but even more. Okay? Because holding and hoping is bad. Bad, bad, bad. Now, Qs were rejecting here. Qs made it right down to and through this pre-market midline, which led me to believe that we were going to head down to our lower line. That didn't happen. Okay? However, a lot of folks got out at that pre-market midline, and that was the end of their trade. I did not. I wanted to see the Qs down here on the blue line. Almost was a mistake, but fortunately we pulled back to that same resistance, which by the way had proven to be pretty damn strong in pre-market right here. Also in the open, we said, hey, aggressive entry, but great time to consider puts at this line on the Qs, okay, which is where SPY was here. Okay, so both of them were near a resistance. We'd want to see it come back down to same spot on the Qs, the support that they had created right here. Okay, so whenever that happens, we're still hoping for this third line down, but we built a support here. You can't argue that. Well, after that particular move down, Qs pulled back again, another potential put entry. If you took it, same profit target now. We're not aiming for this blue line. We should consider taking profits wherever is when the Qs come down to this support. Okay, it's been touched and tested, I don't know, 7, 8 times. You don't want to push your luck too much, okay? The fact is, if we're struggling to move lower, now at the same time, while we're holding on to this trade, for those of us who were, it's because ADD was falling off a cliff as well. So ADD gave us the confidence and the comfort of knowing that the rest of the market at the time was selling off. Qs were struggling to break through that resistance. That's why puts up here was worth the risk. And then holding on to your puts, if you got into them aggressively, was worth. But what you don't want to do is ignore the fact that we have a pretty solid support that's built here that wasn't there in pre-market. So you don't want to push your luck. Ultimately, we got out of this candle, out of this trade in several different spots, but all terminating when the Qs kept hitting that same support. Okay, that right there was a 41.5% trade. If you got in here, about 30% here, 25% here. So either way, great trades if you got the entries aggressively or at the pullbacks. All right. And then what were we talking about? I said, guys, if Qs can breach 417.73, she's probably going to run up to 418.35. It's the next line up. We pulled back. We're coming up to resistance. Now, some folks bought puts here. Nothing wrong with that. The minute we put in this higher low right here, I said, guys, if you're in puts, you better be careful. This is the first time we're making a higher low since coming back to this line. I'm assuming at this point that the resistance is going to fail. So if you're in puts, consider stopping yourself out. If you're looking for calls, be ready. That's all. Higher lows, I wouldn't buy puts on. I wasn't buying calls here either, but I did say if we get through 417.73, we're going to head up to 418.35. That's a decent move. And that happened on this candle, and it reached that resistance on this candle. Now, you would have had to have been quick here because if you bought in at the end of that, there was enough room left for you to take the trade. Now, we did have several people buy calls here, which not a bad thing because the market was very green this morning. ADD was opened up above 1,000. Your top 10 was green. I mean, it just seemed like a pretty healthy day to the upside until it proved otherwise, at least in the morning. We hit that resistance, suggesting taking profits. Okay. Now, you have several things. One of which was, if you're interested in puts, guys, at this point, I wouldn't touch them unless we can get back below 416.87. This support right here, we want that to fail. We'd be looking for it to get down to 416.60 if it does. And if we can get through 416.60, maybe we could start to sell off a little bit more. Strong support. Okay, strong support. We were looking for a breach of strong support, hoping to turn a bunch of buyers into sellers, which would give us momentum. We're also coming from much higher, which means the sellers are going to have to do work to get down here in the first place, and they're going to have to break through a strong level of support in order to continue that move down. And when they did, I think we got our first candle close below that at 1014. Is that when we got here? Yeah, 1014, 1015 was right here. We weren't even looking at the SPY chart. Here's your entry candle. Now, if Qs can close below that and stay below it, just right here, we're looking for the move to continue down. And each one of these lines that we hit would be a consideration for profit taking. I don't care when that is or when you do it. Could be here, could be here, could be here or here. Banger of a trade. We don't know which line's going to hold. Doesn't matter. Okay, it doesn't matter. Just respect that they exist and move your stops down or take your profits. I don't care what you do. It's your money, right? We hold support here. We pulled back up, right back up to our original put line. Oh, by the way, if you wanted to play the put line, you got your entry here again with the move. Similar move, just less aggressive. Back up to resistance. And then what are we looking for here? We broke through support for the first time on this candle. It's a low a day. You want to make sure it's going to hold as resistance. Not only that, we'd like to see Qs pulling back to a level of resistance, which was 1054. Yes. So Qs closed below support, turned it into resistance. This is a great opportunity to consider taking a trade. Right? We get in here. We're looking for the next line down. Got out here because Qs made it to support. It pushed through and eventually touched it on SPY as well. And that's when the good time to the upside started. Now, I'm not against playing calls when it's time to play calls. What did we want to see in order to take calls on SPY? Well, I said, guys, if we can get back above at least 414.77, Qs have the ability to run right up to 415.38. I don't know if it stops there. It doesn't matter. But from 77 to 38 is worth the move. Okay, there's a decent amount of space there, and if it goes, I believe SPY is going to follow it. Well, here's your entry here, and by the time it got to that resistance, it was here. So if you played your entries on the Qs and you got out because the Qs hit resistance, that was a nice clean trade. Took a few minutes and probably a 30+% return. It hit resistance, pulled back, putting in a higher low, legged up to the next resistance. Once again, another higher low. So we're pulling back to support on SPY at 1145. I'm willing to bet we're pulling back to support on Qs right there during an uptrend, looking for it to at least make it back up to 416.15. That happened here. Don't have to stop yourself out of the trade. Just get in. Now, what was going on here? I think Qs had just closed above another resistance for the first time at 1156. Yep, right here. Looking for it to continue up. Every time we close above resistance during an uptrend, we're looking for it to go up to the next resistance. Guys, almost every time that it happened during the move of that trend, it worked. Okay? Now, coming back to here, people were suggesting buying calls here. Nothing wrong with that. Okay? But the minute you see a lower high, expect support to fail. It doesn't always fail, but just expect it to. If you did, you could have got out of your calls early enough to avoid this. Okay? But, so here we are, moving up, moving up, moving up. We get the pullback. Now, at this point, I think I was at lunch at now. So next thing we're looking for is a call, a breach above 498.53, our original call line. Okay? At this point, we could be aggressive on this trade. Why? Well, because look at how much work the buyers have done to get from the low of day all the way up here. Is there any shorts left on the day in the market? Probably not. Why? Because our high of day was all the way over here. There's nobody short anymore. They were all here in pre-market, all here. So anybody who took a position short today, if we get up to that call line, you're all underwater. And if you're still in your trades, you might be saying, shit, I got to buy to close. And guess what happens when buyers enter the market? Well, I'll just leave it up to your imagination. We started to squeeze. All right. We started to squeeze. That's all it was. Just kept grinding up. And every one of these circles here was potentials to take your profits in a beautiful move to the upside, culminating all the way up at 238, which was right around here as we were just a couple cents away from our final Q's line high. Okay. In which case, every one of these went from line to line, line to line, line to line, line to line, pull back to support, back up to the line, breaking support and starting putting in lower highs. I don't trade this late in the day, so it doesn't matter, but it's still worth noting that these lines of support and resistance, well, if you can use them and start to figure out the way to justify how long you should hold your trades for, or take your profits at, or move your stops up at, or get into some of these trades, that's where the magic is, guys. You don't see a single indicator on my chart. You never will, because these guys right here, your left and your right eye, are the best indicators you have. Trust your eyes. Trust the chart. All right. If we're trending up, play with the trend, wait for pullbacks to support levels, play your calls. If we come off of a lower high, pulling back to support, skip the calls. Okay. This one here, I recommend don't take calls because we're coming off of a lower high. And look what happened. It held support and it ran right back up. I'm okay missing a trade like that. But that more than likely ends up doing this scenario. We're pulling back to support, we get below it. Okay, we're putting in higher highs, higher lows again. Okay, wouldn't buy at resistance here because of that. But here's a lower high, we get below it. Lower high, we get below it. It happens all the time. And if you can just learn to respect the price action instead of saying, oh, I missed all kinds of great trades today. Let me punish the market and I'll teach it. It owes me. right? We talk about this all the time, guys. Now, again, trading this late in the day, unless you get a good move, quick move to the downside or the upside, theta burns, and these pullbacks hurt a lot, okay? If you're playing same day expirations, this is not a great time to trade. Now, if you happen to get in calls because of the call line all the way down here and you're all the way up here, you've got a lot of latitude in the potential for making good money. And you can let the trade breathe a lot more than somebody who gets in way up here. Okay, especially late in the day. Now, what were we looking at here? Well, we're looking for a close back below this support, looking for it to get down to $500.79. Again, it's a late day trade. We're coming off momentum. You got in here. We never closed back above it, and straight down to this line we get. Only took about 8 minutes to get there, and it returned some profit. All right. That's pretty much it. So I know we focus a lot on the Qs today, and I already answered why I don't trade the Qs. But it's because I have too many people depending on my SPY levels in my, speaking about SPY because they're trading futures or SPX. So I'm never going to abandon SPY. She affords me a great living and a great opportunity for a comfortable lifestyle. And Qs, support and resistance, by the way, guys, works for everything except for penny stocks. I wouldn't trade penny stocks, but you can learn how to plot these things and learn how to use them to your benefit. You might be surprised at how little indicators and anything else really matters. Okay. With that said, we're going to wrap it up. I hope you had a decent day today. The chart provided a lot of opportunity today, a lot of clean moves up and down, whether you're aggressive or not. There was tons of opportunities. But I hope you all made money. If you didn't, focus on what happened if you went from red to less. If you went from green to less green or green to red, start analyzing why your red trades are red. Is it because you're getting in late? Is it because you're trading too late? Is it because you're holding your losers too long and your winners too short? You've got to start figuring out what is causing you to lose ultimately and start working on the resolve for that, right? Stop doing what you know doesn't work. And sometimes that just means walking away when you're already green. Greed will kill your account. It will kill your progress. I've got somebody in my room today. Okay. He's been with me for a week and a half. He's already tripled his account value just by taking 2 responsible trades per day. I've got a guy who's been, 14 days in a row of one and done trades. He's up 153% on his account. Just taking 1 trade a day for 14 days in a row. Guys, trading more doesn't mean more money necessarily. A lot of you guys are giving up good growth by chasing larger trades or larger returns. Inherently, you're making yourself go backwards instead of forward. Right? If you were to have 20 green days in a row, even if they're $10 a day or $20 a day, that's $200 or $400. If you're not typically up $200 or $400 every 20 days because of the way you're currently trading, maybe just aim a little lower and be happy with a little less. And in the end, it means more. Guys, if you don't know this yet, take your cues from the Qs. It's like a cheat code for SPY and SPX and futures. The Qs will tell you everything you need to know for the time being, for the most part, about what SPY is going to do. All right? Get used to looking at both of them. It will change the way you trade, I promise. All right. I know I said we were going to get out of here, and now we really are. So if you got any useful information out of this video, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, well, there's a link down below. We'd love to have you. And I hope you all made money today. For those of you who are in my community, we have a Q&A tonight. I'll see you at 10 o'clock Eastern. And for those of you who are early birds, we got a live charting session tomorrow at 8:30 Eastern. I'll see you there. Until then, I love you guys. Till tomorrow. See ya.